Welcome to another Lumi Financial Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Lumi USA, member of the Investment Committee for Lumi's Investment Services. Michael, good to speak with you again.
Great to speak with you, Zev.
So there's always something new happening. So from what I understand, the 10-year Treasury has been moving. It's now above 125. What does that all mean for us?
Yeah, it's a great question, Zev, and I think it's one of the items that we've been most focused on. And as usual, let me just say that the comments on today's call are my opinions, not necessarily those of the bank or the broker-dealer. But markets are always interesting. Things are always changing. And we've really, over the last few days or so, seen a sea change in sentiment for the U.S. Treasury market. I guess we've long been talking about the rate environment. The central bank has the front end of the curve anchored. So essentially their rate policy is holding down the front end to extremely low levels. You look at the front end of the curve, which is, what probably gets the most news. And, the 1 year rate or the 3 month rate or the 6 month rate are still all well under 10 basis points. The Fed has less control over the long end of the market. The long end of the market is controlled by basically market forces. And essentially, there's something happening where the market has started to drive yields up higher, prices lower. And I think it's up to us in the financial markets right now to determine what is driving that. And there's a few culprits out there, and it'll take a little bit of time to kind of sort out what it exactly means. But we have a combination of policy from the Biden administration, again, pushing very much, all in towards, a $1.9 trillion stimulus package or whatever the final number ends up being. You're continuing to see, further recovery in the U.S. Retail sales today came out extremely strong at over 5%. So while some data is mixed, again, there continues to be a view that all the stimulus is going to lead to spending, which could potentially lead to inflation. So there is this view of growing inflation, reckless spending or appropriate spending, but the stimulus, and then also just a concept of are we going into a recovery cycle? So as we're seeing all this happening, people are demanding more and more for the long end of the curve in terms of what they're willing to, what lower price, higher yield in order to take on longer term risk, because the view is that the rate market is going to continue to rise. And I would say across all of Wall Street, you started to see commentators and pundits across the board start anticipating higher rates. Some people believe that the market will kind of falter out here and will stay somewhere around this range of around 125, 130. You're also seeing some numbers start to creep up where people anticipate that towards the end of the year we could get up as high as 2%. So that's kind of the backdrop of what's happening in the fixed income market. And, I'm happy to kind of give a couple of thoughts on, I think, what that means for the equity markets as well. And, we continue to get a lot of clients concerned about valuations in the market. And I think one of the things that we've talked about previously is we've seen an equity market that largely has been driven by some of the large cap, call it the FANG stocks, so the big large cap technology companies that we're all very comfortable with. And given what I've talked about, again, more fiscal stimulus, which should lead to broadening recovery of the economy, recovery from a recession, which again is a broadening of economic growth. If you think of the equity market as kind of like a bicycle peloton, the leaders in 2020 were clearly some of the large cap technology companies. That's where you actually were seeing growth, and growth was a scarce resource, so they were taking the lead. And now what I think we're starting to see is a changing in the rotation. So who's leading the peloton now? And instead of being the large cap tech companies, you're seeing smaller caps. In some cases, you're seeing emerging markets. As recovery broadens out, the leadership kind of, again, think about a peloton. Those who kind of carried the torch in 2020 are falling back a little bit. Those that were lagging in 2020 are now starting to come to the forefront. And, markets are continuing to rise. We saw a very strong February. But again, leadership has changed quite a bit.
So overall, you're bullish, and one of the things that you keep on saying is the technology companies that technology plays a major role in keeping our financial markets humming and growing.
It's a good question as well, Zev. And I think one of the things that we're seeing is which elements of technology. right? And the last couple of weeks, the big story, was GameStop and Bed Bath and Beyond and the short squeeze from Reddit. But I think the more important story was that there is a shortage of semiconductor chips for the automotive industry. All right. So when we talk about technology, again, last year was a lot of social media, software, again, the FANG stocks. And this year, I think what we're seeing is things like, again, smaller cap technology companies that are involved in cloud computing, semiconductor companies, software companies, just a broadening out of that tech rally. So again, if we believe that we're starting to see economic recovery, if we believe that we're going to start to see more growth happening later in the year, the industrial elements of society or of the economy are going to start to take the lead. And a key part of all those industrial elements are semiconductors. And again, that's why we're seeing a shortage of semiconductors for the automotive industry, because again, you need to ramp up for higher levels of demand. So I think we're seeing a big change of a lot of that. And it's not going to be a question of looking at technology with one broad stroke. It's going to be looking at the different components of it, looking at the different sectors, the different industries to look for where you can really see key leadership. So while I do think that we will continue to see financial markets on the equity side move higher, I think we really need to be careful about leadership roles. Again, with the back end of the curve moving up so sharply, we're also seeing a change in terms of, some people are starting to look at financials a little bit differently. So again, there's just a lot of leadership elements that are happening. Oil prices have surged up to right around that $60 barrel, which they have not been for quite some time. So again, the energy companies are getting a little bit of a bid. Some of it is related to some of the storms and winter activity down in Texas. Some of it is just related to global demand picking up because of recovery. And, one of the things we haven't talked about, which is kind of underlying everything, is COVID and the vaccination process. And, again, vaccines are continuing to roll out, whether it's 1 million a day or 1.5 million a day or whatever the number is. We continue to move ahead. There continues to be optimism that the more vaccines will come on board. There was a recent reports out of Israel which said that the Pfizer vaccine was proven to be about 94% effective. So those numbers are even better than some of the test numbers were projected at. So when we start looking ahead to the summer, and I have seen one report that was estimating that the United States at this current rate of vaccination should start to see significant herd immunity by mid-June. So again, that could bode very well for the summer holiday season, for camps, for all sorts of things. So again, I think that there's a lot of stuff that the market's looking at moving ahead. The challenge is going to be how much of that is already anticipated. And I think a key thing that we're going to have to look at going forward is what is the Treasury market telling us, and how far will rates continue to climb. So that's going to be one of the key governors that we're going to watch, and I assume that's something that we'll talk about in the coming weeks.
I'm sure we will. Michael Zaremski, head of U.S. Private Banking, Bank Luma USA, member of Investment Committee for Luma Investment Services. Thank you for being here with us.
Thank you so much, Zev. Always a pleasure, and have a great week.
You too. And we're going to be right back. Don't go away.